Yeah, we're in an interesting position because everyone at BCA, and we have 18 strategists running all of our services, every single one of us now believes there's a recession. And that's exactly the opposite of what the market believes. There's a very strong narrative out in the market that we're facing a soft landing. We don't believe that. We see signs that the economy is turning down. The labor market, that data today was just one sign of that. US unemployment has gone up from 3.4 to 4.3 in the last 15 months. There's things that are breaking down quite rapidly now.
There are things that are breaking down quite rapidly. Interesting, Garry. So was it the 4.3% unemployment read in the last payroll report that got you thinking that perhaps it's not all hunky-dory in the broader economy and we are heading towards a recession and we need data confirmation, arguably, in the next set of numbers? And does that mean that 50 basis points in terms of cuts in September is prudent, or is that shouting fire in the proverbial crowded theatre?
Yes, so we always have to be humble about data. And, we just saw this 880,000 revision to the payroll numbers. The data is a problem. And you can't just look at one release or even one data series. You have to look at a range of things. But in the labor market, the US labor market, a range of indicators are clearly deteriorating. Manufacturing is very weak. If you look at things like Japanese exports, they're weak. Across the board, it's telling you that the global economy is not on a very solid footing. So in terms of what the Fed should do, it does look like September's on the cards. We'll have a couple of inflation readings, another jobs report before that. But I think we'll find out on Friday when Jay Powell speaks at Jackson Hole. I think he probably will confirm that September, barring some surprises, will happen. What I would push back against, though, is that the market believes that the Fed fund rate at the end of next year will be 3%. It's currently 5.3. That will not happen unless there is a recession. So the market has really got it into its head that even in the soft landing, the Fed is going to cut rates. And in fact, the Fed's going to cut rates more quickly than the other central bank in the developed world. That doesn't make a lot of sense to me.